Hey everybody, back again for another edition of That's Our Two Satoshis Live. I'm Jeff Dorman, Chief Investment Officer at ARCA, joined by my colleague and astute macro and protocol analyst, Nick Coates. How are you today, pal?
I'm good. Happy to be in Los Angeles these days.
Yeah, welcome to the team, pal. Don't reveal too much about your location. We don't know who's watching, but it's good to have you in person finally. So we're back again. For those new to the show, obviously every week we write a blog called That's Our Two Satoshis. You can find it on our website at ar.ca /blog. We generally talk about things going on in the digital asset market. We've been doing this for 4 or so years now, and just recently started doing this show as well to talk about what we are doing on a day in and day out basis. So before we get started here, this commentary is not intended to be investment advice, investment research, or a recommendation. So please consult your investment professional for your own circumstances. But with that said, let's talk about what's going on in the market. So to start with, Nick, 2 things that are near and dear to your heart, the macro economy as well as Ethereum. Seems to me that both of those were the drivers of last week's market performance. On the macro side, we start to see a lot of hawkish statements from the Fed, setting the stage for this week's Jackson Hole Forum, which is on Friday morning. Basically every token traded down last week, as well as equities and bonds and pretty much everything from a risk standpoint. But I don't think that was the sole reason that the market went down, because if you look at the betas, Ethereum was down 20% or so. You had other tokens down 25 to 30%. That's a massive beta to equities. I don't think this was related to macro. I think there was much more idiosyncratic digital asset specific reasons we went down. And I think it was 100% related to fears about the Ethereum 2.0 merge and everything that came with these Tornado Cash sanctions. So what says you about the tie between macro versus this Ethereum specific news?
Yeah, I think that's mostly right. There were definitely some macro concerns. I think the market was really focusing on people getting scared up ahead of Jackson Hole. I think, today's sell-off and Fridays really had more to do with some options dynamics. There was this big expiry on Friday, so a whole bunch of call options ran off that were in the money. And so now you've got dealers kind of chasing the market downwards, trying to get hedged again. But the kind of broader expectation is looking up forward to Thursday, Jackson Hole, and what Powell's going to say there. As far as the Ethereum point, I totally agree. I think that this is, people are trying to get bulled up ETH ahead of the merge, but I think there's less conviction than there probably should be around it. And the slightest fear is kind of scaring people off. So
yeah, let's talk about that, because I think look, one of the things we always do as investors is we're looking for areas where the market either has it wrong or is underplaying or overplaying something, right? This is one of the most telegraphed events in blockchain history, right? Nobody is getting caught off sides by the fact that the Ethereum 2.0 merge is set to happen middle September. I think September 15th, plus or minus a day or two, depending on the blocks. But this is not going to catch people by surprise that it's happening. I think what is catching people off guard is what the reaction should be to this, right? Is this immediately bullish? Are there risks that it'll happen? And I think, for the most part, you could say that the merge was, at least somewhat priced in up until last week. And then with the Tornado Cash sanctions and everything that came with it, to blacklisted Ethereum address response from some DeFi applications, blacklisting addresses as well, to what I think is 5-6 degrees of separation in terms of a leap to what that might mean for the Ethereum protocol itself. So I tasked you over the week to come up with a list of all the things you're hearing with regard to, like, why are people so freaked out about the merge? Why do people think that it's either not going to happen, or it's going to get delayed, or there's going to be technical faults, or Ethereum validators are all going to leave? And I thought you did a really nice job of laying this out in our blog this week, talking about the 6 things that you identified as real concerns around the merge and why most of them are probably overblown. So why don't we start with, actually, before we get into that, is that fair? Is that basically what we're seeing here in the Ethereum community right now is sort of a fear of what's happening over the next 3 weeks?
Yeah, I think there's a discussion going on. I think maybe the discussion is kind of being blown out of proportion, in that people are believing that people are more kind of misaligned than they actually are. I think people are pretty aligned about what they want to do about these Tornado Cash sanctions, and and how they think that affects the Ethereum protocol. And I really do. I mean, I agree with you that it is very far removed from the actual, Ethereum protocol and the valuation of ETH. But I think that's probably the most legitimate of the concerns. Mostly that's saying that all these other concerns are so illegitimate that I really think they're, very overblown.
Yeah, agreed. So let's get into it. The reason I think this is such a well-timed piece is that, it's rare in investing when the obvious trade works. But in this case, the obvious trade is long Ethereum. And it almost feels like everybody in the market is trying to talk themselves out of it because it's so obvious. You look back a year from now, whether or not Ethereum really is deflationary and whether or not this really is one of the best investment assets, it's not going to be based on what's happening with Jackson Hole or CPI or little technicalities around the merge. Yet it does feel like most of the market is trying to talk themselves out of what appears to be one of the more easier trades these days. So let's go through each of these 6 reasons that you came up with. And if I'm not mistaken, you consulted developers, you consulted applications leaders, you consulted internal research people around the street. You came up with 6 things that you've heard over and over again. Let's go through each one of these and why we think these are overblown. So let's start with number 1. There is a real concern somehow from the market that this merge will be delayed again. Will that happen or will it not?
Yeah, I think this is just a legacy of people being skittish after, Vitalik has been talking about switching to proof of stake since 2015. And so people are, I think, probably rightly skeptical that it's really going to happen. But if you had really been involved in the developer community calls and understood what the progress on this was, you wouldn't be skeptical at all. The date is set. So there's this the kind of total amount of computing power dedicated to Ethereum is how they determine at what point the merge will actually happen. That timing is already set. So it's very, very unlikely that's going to get changed. The developers have talked about things like the OFAC sanctions and stuff, but they're not at all considering changing the date on that as a result of any of that stuff. If anything, what would happen is if for example, mining power starts coming off the network, they might even move that date up. So you might get it sooner. That's really the only kind of way, barring some absolutely catastrophic failure that is just extremely unlikely with the last couple tweaks and tests.
Great. Well, if I was good with graphics, I'd have a checkbox up here and we put a check through that one. So let's dismiss that one as a completely overblown fear. All right, let's go further with the miners. Could there be a miner revolt?
Yeah, so this was something that was more worried about like a year ago, I think among a pretty smart contingent of people. And I think this could have been chalked up as a pretty legitimate risk. The idea being that miners, as you get closer and closer to the merge, don't have as much incentive to act in the best interest of the chain. So they could start doing all sorts of malicious stuff like reorging or basically just trying to coerce the validator set or and the community into pushing the date of the merge out further. At this point, again, with the date set, there's really not any incentive to do that. Most of the mining community has really moved on. Like the biggest mining pool called Ethermine, they're already deciding to be a staking service after this. You've got most of the other ones who are going to continue mining already said, we're going to ETH Classic, we're going to shut off operations. There's just not enough consensus in the mining community to do anything about this at this point. And I don't think there's really that much interest to do it.
Okay, so another check mark there, another fear, seemingly pretty silly, at least in terms of market reaction. Let's go to number 3. Concern number 3: will any of the DeFi apps start working, or will the assets not be copied over correctly, or will you see any sort of a hiccup with regard to TVL or issues around DeFi or gaming applications?
Yeah, so this was actually the most cited concern I heard, and just to I can put all concerns to rest. This is just not how the merge works. The merge is essentially just building on top of a new block, just like every other block builds on top of a new block in a blockchain. And all you're doing is just slightly tweaking the code of the block you're going to be building on next. So it's not affecting any individual applications or any tokens or anything like that. It's just a slight tweak in the change or in the code of the protocol itself. So there's just absolutely no risk that any tokens or applications individually might stop working.
Meaning what, like 1 hour, 2 hours, 10 hours after the merge, it's business as usual? You're back to taking loans on Aave and playing games and moving assets around, or people need to pause right around the actual minute by minute of the merge, or what does that mean?
That means that even like after the next block, there won't be any issues. The point where there might be issues is with, I think, and I wrote about this a little bit later, is with finality and how the clients talk to each other. So the clients are the people who are actually kind of responsible for allowing everybody to talk to the chain. And so there might be, in some of the tests, there have been specific clients that don't talk to each other right. And that could be an issue in, like, as you say, like the minutes, an hour or so after the merge. But in every single one of these test nets, they've gotten the clients back online, talking to one another very, very quickly. And then everything's business as usual. The other point here is that a lot of the times it's because these are just tests and they're not the real thing that it failed. So the fact that there are very few people using it, that there's few miners on the chain, that was actually contributing to the problems, or that the validators or the clients weren't actually prepared for the merge. Like, everybody's going to be prepared for this. Everybody knows it's coming and it's a big deal.
Yeah, nobody shows up for practice, but we show up for
Exactly.
we show up for Game 7 of the finals. I get it. Okay. All right. Here's my favorite concern that we've heard over and over again: that the merge itself will be unsuccessful. I don't even know what that means. That like there's some sort of binary success or failure rate with the merge. So what does that mean? Why are people concerned that this will fail?
Yeah, I mean, I don't fully know what it means either. I've seen, for example, traders, Arthur Hayes talked about, like, this binary, and he was writing a bullish post, but he's like, oh, if the merge fails. And I was trying to interpret how to take that. I mean, just to be clear, like, there's no world where the merge, like, we get to that block and then it just doesn't happen. Like, the clients will switch over. They will be ready to switch over. And the only potential issue is what I just talked about, that you may have some that don't talk to each other rightly. And then maybe, like, the big problem would be you don't reach finality. So some of the transactions come through and we're not technically, like, agreeing that all the transactions are final and settled. But that, again, this is extremely likely to get resolved after a few minutes or an hour or so. And it really shouldn't result in any disruption of activity.
Okay. All right. So we're 4 for 4 in fears being overblown. Let's go to number 5. I think
it's just another point on that, actually, too. Like, we've had three test nets and 9 shadow forks. All of these are just, basically tests of the merge. Every single one has been successful, quote unquote. They've all merged properly. If there were some bugs, like I said, it might be related to clients not being prepared fully, but every single one was successful, and there's absolutely no reason to expect that, like, we get to that block and it just doesn't happen. It's just really not in the cards.
Okay, let's go on to what I think is your favorites. Concern number 5, related to the proof of work fork, the new ETHW token that will be kept alive by miners looking to scratch any chump change out of the thing that they can. What's going on with this proof of work fork?
Yeah, so this kind of grew as a result of concerns of the miners, that they, it sounded like a lot of them haven't fully, become profitable with their mining equipment yet. So they were looking for a way to continue getting use out of their mining equipment and stay profitable. And so it seems like a group of Chinese miners, especially, are working with Chandler Guo, who was one of the very prominent Ethereum Classic proponents back in the day from the Ethereum DAO hard fork back in 2016, I think. And then Justin Sun, who runs the Tron blockchain. I think he's just trying to cause chaos whenever he can. But they're trying to fork off a chain from Ethereum and essentially have this proof of work chain in place where they keep the proof of work going forever. I was already pretty skeptical of this working. The entire community is behind the proof of stake chain. But there've been some rumblings that, maybe this could compete, like, this is a real threat potentially. But you look at some of the code changes they've done and you just have to laugh. Like, for example, we saw Ethereum do this EIP 1559 upgrade last August, where it seems like about 80% of the ETH gets burned from transactions. In this new chain, they're going to have that be going to a multi-sig wallet controlled by the miners. So if you're a token holder, you get nothing now. They're also freezing most of the applications on the chain because they know the stable coins on this new chain will be completely worthless. So it's going to catalyze huge liquidations across DeFi, basically destroy DeFi, bring the price of ETH, whatever used as collateral, way down on that chain. So they're just kind of freezing everything until they get that figured out. I don't really think they'll figure it out, but a good luck to them, I suppose. You really just don't get involved with this, I think, and I really don't think it's that big of a threat to kind of the dominance of proof of stake ETH.
Yeah, I agree. I mean, from a trading standpoint or an investing standpoint, obviously there's been a lot of derivative type trades or arbitrage type trades that have come about this, people expecting an airdrop of the new forked chain and any dislocations you might see. But from a long-term viability of the ETH proof of work chain relative to the proof of stake chain that we're heading towards after the merge, I think there's pretty clear-cut, no competition there, and probably something that 2 weeks from now we won't even be talking about, or 2 weeks post the merge we won't even be talking about. Okay, so now we got 5 legit concerns in the market that have all been basically rubber stamped as not really being all that impactful. Let's get to number 6, which I think has a little bit more teeth to it. So concern that validators will censor transactions. And again, this comes on the heels of the recent OFAC blacklisting of Tornado Cash addresses. How big of a risk is this? I can give some color in terms of my opinion after you're done here, but what is the real risk here, right? Essentially, what I'm hearing from the community is that there's a real fear that validators, especially here in the US, like Coinbase and Kraken and Staked, will not be able to validate transactions, will not be able to operate as nodes, because the government will basically come in and say, you can't do this unless you censor transactions or censor blocks that have transactions in them from Tornado Cash, which is obviously somewhat impossible, right? I mean, effectively, you're shutting down the entire Ethereum blockchain if you start censoring all the different blocks. So I think this is a completely far-reaching interpretation of what the OFAC Treasury news was, but let's play with it. Let's say that this is a real event. What do you think here in terms of the risk regarding the merge?
Yeah, so this gets really technical really fast. I think what the big risk that people are concerned about for the price of ETH is that this becomes a contentious issue, right? So I think from an ideological standpoint, I think different people have different views as to whether validators should be able to censor these transactions or not. I think it's harder to make a bold claim about if everybody agrees on censorship is okay, or they don't agree on that, what the value of ETH should be. But the really big concern is that the community fractures on this issue, and there becomes so much competition about this that there's a contentious hard fork, and you have this kind of censored ETH and the non-censored ETH chains that become an issue. Again, this is something down the line. This is definitely not written into the laws right now. This is not what the government is looking for right now. But that is the concern. I think what you've seen is that the community is very aligned behind the no censorship chain, and that they're going to do everything they can, especially after proof of stake, to kind of keep that as the status quo. Additionally, from just the merge standpoint, this is not a risk to the merge happening. As I said, the developers are completely aligned with this on this issue, and they literally are not talking at all about delaying the merge as a result of this issue. I totally agree with you that this is something that's kind of 5 derivatives after what actually has been proposed in legislation. I think it's just people who are very passionate about this issue of kind of permissionless censorship resistance trying to look ahead on the issue and make sure that we've got systems in place that they've got systems in place to fight against that.
Yeah, and I think from my standpoint, I think it's an important and healthy debate. Don't forget, this all was started because somebody on Twitter decided to just ask a blank question. What would you do, Coinbase and Kraken and Lido and Staked, if the government came in and stepped in and said you can no longer validate transactions post the merge? And Brian Armstrong, of course, responded and said, well, that's a hypothetical, but if it were to happen, we'd probably more likely leave the staking business altogether rather than start censoring blocks. A hypothetical, and again, an important debate, but a hypothetical that's based on no real action today really set the market into a tizzy. And I think that was a really interesting response, given how unlikely this is to even happen, combined with the fact that, this is a U.S. problem, not a global problem. And as we saw with Bitcoin miners, when China shut down Bitcoin mining, well, guess what? All the hash power just went elsewhere in the world. The same thing would happen eventually with Ethereum, right? If all of a sudden U.S. validators need to step away, very bad for the business models of the U.S. validators, right? Coinbase is estimated, I think, to make $600-700 million in revenue from staking. Very bad for Coinbase if that happens. Not really an issue for Ethereum or for the blockchain, because all those transactions would just all those nodes would then transfer somewhere else in the globe. So I think this is a complete non-event for the market. And in my experience as an investor, across debt, equities, digital assets, you generally want to take advantage of when prices are moving incorrectly based on miscategorized assumptions or misinformation. And I think in this case, again, if we're right that the market fell 25 to 30% last week because of these fears that popped up around the ETH merge, it's almost certain that's going to retrace, given that these are pretty overblown concerns. So we'll see. We got about 3 weeks between now and the actual merge, and we know that markets can do a lot of crazy things over those time horizons. Even just last week alone, I think we had 650 million or so of futures liquidations based on the price action in digital assets, which is the same amount that we saw the day that Three Arrows blew up, or the week that Three Arrows blew up. So clearly there's some market angst out there. But shout out to you and to the ARCA research team and everyone else you spoke to really break down what are these fears in the market around ETH and the merge, and are they validated or not? And I think pretty good evidence to suggest that these are going to come and go with no real market implication. So that's it. We'll see if we're right. Nick, as always, thanks for joining us. And for the listeners and viewers, check out the blog on our website, ar.ca/blog. Follow Nick on Twitter. What are you at Nick_Hotz? Is that correct?
Yeah.
Great. Find Nick. Let's ask more questions about Ethereum. If we're missing anything, if there's more concerns out there on the ETH merge that we missed, let Nick know. We'll talk.